You're listening to The Local Maximum, episode 223.
Time to expand your perspective. Welcome to The Local Maximum. Now, here's your host, Max Sklar.
Welcome, everyone. Welcome. You've reached The Local Maximum. Aaron, how you doing today? Let's get that energy up. I know it's not quite the 1 a.m. discussion that we used to have, but it is quite late. It is almost 11 p.m. So
it's been a long weekend and not the 3-day kind.
And you look different too. So I don't know. Every time your hair is done differently. Every time I see you, keep the audience guessing, huh?
It's part of my ongoing disguise and makeup routine.
All right. Well, you've got to keep me awake during this because I'm exhausted because I went to the gym this morning and did a whole class there. And then during the day, I was at this riot thing all day and I'm just totally wiped out.
So, riot?
Yeah.
Please do say more.
Well, it wasn't actually a riot. You know, I tend not to participate in riots, but this is actually the 250th anniversary of the Pine Tree Riot, which was in Ware, New Hampshire. So I got up and I was like,
where was it?
Ware. That's the name of the town. I'm sure you've been there. Where?
I haven't.
There. You have. Okay. Yeah. So, so the riot was where? And it was a quarter of a millennium ago. And they did a little thing about that.
That's a funny way of putting it.
Yeah.
Kind of blows your mind.
As far as I can tell, I really had no idea what this was about. Like the king of England said all the pine trees belong to me and sent some guys there to take some pine trees, and some Ware people basically came and beat up the guys taking the trees. That was my takeaway, but I wasn't really listening too much.
So this was like, well, I guess it would be a little bit different than the New Hampshire version of the Boston Tea Party.
Yes,
but
it was like a year and a half before the New Hampshire. Hang on, I got a T-shirt. Let's see what.
So if we were professionals, this is where I would vamp, but I'm unprepared.
Well, what does it say on the T-shirt? Here we go. What does this say? Where, New Hampshire? Where the
home of the Pine Tree Riot?
Yes.
1772.
A riot I can get behind. Yes. It's like, I left New York because there were riots, and now I'm going to riots. What's going on here? All right. So
you best not touch the King's Forest.
Yeah.
I feel like there was a rather famous folk hero who violated that rule and wore a funny hat with a feather in it.
Yeah. Probably before the Pine Tree Riot. That was. All right, so today we're going to discuss Elon Musk's takeover bid of Twitter. And I know I discussed that probably, 2 weeks ago or 3 weeks ago or something. And
right, you had your hot take before you'd heard all the media hot takes.
Yeah. So that was good. I don't know if how well I did, but now we know a little bit more about it, and it'll probably be more exciting if it actually happens, and then we'll have to talk about it again. But it's a developing story, and to set this up, before we talk about his bid to take over Twitter, I want to talk about a couple things. First, what's happened to shareholder value over the last year? Because I want to go back to episode 211, not too long ago, but that's back in February. And I was talking about how the huge Facebook stock drop, and I said it's dropped before, and sometimes it's dropped over a long period of time, like a year and a half, but in many cases, it's come back. In this case, so far, it has not bounced back. It's actually gotten worse. So, Meta, no one's going to call it Meta. Their stock has gone down quite a bit. Netflix, they've gone down quite a bit. Netflix is a really interesting story in terms of just value, in terms of stock price. Their stock price grew 69x from 2011 or 2012 to 2021. So over a 10-year period, it grew by a factor of 69. So that's from, if you put in $10, you'd have $690 at the high, which is incredible. That's like cryptocurrency level returns right there. and now it's gone down to $250. So I'm not going to do in my head what percentage that is, but it's less than a third, isn't it? So
Yeah.
And maybe that's a little different from Facebook or Twitter, but Netflix is often grouped in. But man, they have destroyed a lot of value between those three companies over the last few years. A lot of shareholder value. So to say that what they're doing, and they're doing all this crazy stuff, to say that, well, they might be doing all this crazy stuff, but it's all for the money, it's all for the shareholder value, well, that doesn't seem to hold up.
Well, and that opens a whole can of worms of was any of that value real, or was it a bubble and
True.
And this is the market correcting to a reality, but I'm not prepared to dig deeper into that. One thing I did have to look
we
up
will
while you
for
were
Twitter.
talking
Yeah.
Was you mentioned that for Facebook, now known as Meta, I had to check, have they changed their ticker symbol? And as far as I can tell, it's still FB. I wonder if they will ever change it to something other than that, with the rebranding of the corporate name as Meta Platforms Inc.
Right. So, yeah, there's one way to look at this, which is this is just gyrations of the market, and it's going up and down, and we don't know what it's going to do. Maybe it'll come back up. And then another way to look at it, which is kind of how I looked at crypto, another way to look at it is, especially for Twitter, which is like, they just destroyed a ton of value. And I think there's probably a little bit of both going on there. But I don't think the board can ignore the fact that, they're setting money on fire through their strategy. But if you want to think...
Are you talking about the strategy that they're taking, in the last 2 weeks, or are we talking about the strategy over the last several years?
Over the last several years.
Okay, yeah. So yeah, there's certainly an argument to be made there for a little bit of both. That there was a little bit of a bubble there, and it was priced way above what it should have been, but also that there was probably a point where it was worth significantly more than that. Its current share price, and they've done things which have caused the product they're providing to be less valuable, not just in a stock market speculation sense, but in the actual product being delivered to consumers.
Yeah, in terms of like future value of consumers. And we've talked about this before. They've reached their saturation point, and as a result, they're exploring these kind of, I hate to say exploitative strategies, but more like short-term strategies. Like, how can I make a buck off these customers now because they won't leave us? But once customers start leaving, then it's like, oh crap, there's nothing we can do. So yeah, so Facebook, Twitter, Netflix. I don't know if Netflix is along the same trend. Some people would say it would be, but they are grouped in that FANG thing, which I always thought was kind of weird. But
which apparently FANG is out of fashion now. That was it? FAMG is the new acronym, which is
what's M?
Facebook, Apple, Amazon, Microsoft, and Google.
Microsoft. Okay. So I thought I was thinking Meta, but then there's an F there. So
right. Yeah, I think I didn't realize until I was looking it up earlier that apparently FANG.
That's got to be Mama G.
That was a Jim Cramerism. But yeah, it's a reasonable question whether Netflix belongs in that same grouping.
Right.
Yes, it may have had huge valuations at one point, but is that enough to play in that same pool?
Yeah. Well, also, is it for the same reasons? Like, it's not like Netflix is. I feel like for Twitter and Facebook, it's trends in terms of moderation and how people use their products and how sticky it is. Whereas Netflix, okay, yeah, they need to have subscribers, but it's more about how there's lots of competition now. And some people would say, oh, they went woke and went broke. But I would kind of think it's more, maybe it has to do more with like content, just like,
yeah, well, I was just saying the other companies that are in that acronym. So your Apples, your Amazons, your Googles, possibly your Microsofts. Some of them are in the content producing business. Apple's got their Apple TV stuff.
Right.
Obviously Amazon with Amazon Prime and Amazon Studios. But those are small segments of their business,
right.
Whereas that is all that Netflix does, the distribution and production of that content.
I haven't looked up Apple.
Very different than Apple.
I haven't looked up Apple and Amazon stock, but they have not suffered, or Amazon's down slightly, but they have not really significantly. They have not suffered to the same degree as those other companies have. What about Google? Out of curiosity, let's pull that up.
None of them have had what it sounds like was a pretty disastrous quarterly call,
right?
In recent memory.
Okay.
Like Netflix just did.
Yeah. Okay. So this is not a CNBC show, so let's move on. I just want to, I think the point
back
is
to Musk and Twitter.
Yeah, no. I think the point is that, this is why Twitter, this didn't come out of the blue. This is probably bad management, and also bad management leads the price going down. If it cost Elon Musk $200 billion to buy Twitter instead of, 54.2 billion, which is what he's proposing, then even he couldn't afford it. This is a big cost even for him. 54 billion is not nothing for Elon Musk. It's not like he's that rich. So first of all, I think it's important to talk about corporate governance. We learn a lot about government governance, which is really governance for the state, in school. We don't learn a lot about corporate governance, how corporations are governed, even though those are probably affect your life as much or even more. And you're more likely to be someone who has a control over it, or knows someone who does, or can, as an employee, at least, most people aren't going to be board members, but, most people are going to be employees, and you will be affected by board decisions. And, you probably want to know a little bit about how this works. And I feel like they keep it opaque, on purpose, so that people don't know.
Absolutely. I think I was among millions of Americans this maybe it was 2 weeks ago, who were frantically Googling, okay, what exactly is a tender offer?
Yeah, me
How
too.
does that work?
Yeah.
It's something I'd heard of, but I couldn't have explained it to you in any meaningful detail before I went and scoured the internet.
And it turns out
sound intelligent.
We know a whole lot more about what a filibuster is than what a tender offer is, even though maybe it's good to know about a filibuster. But I feel like that's sort of the bias of schools, where it's probably in your interest to know both corporate governance and state governance, but in the interest of turning people into good citizens, they only want to teach state governance, and corporate governance is not as important. That's sort of, I think that's where that comes from a little bit. I don't know. But anyway, so how did Musk go about this? So when we last talked about this, that was in episode, I should have pulled up that episode number. That was in episode number 220. So 3 episodes ago, he submitted to the board, a bid, which is an offer to buy the company for $54.2 billion. Now, you look this up, the way corporate governance works, there's a board that's supposed to represent the shareholders, and they can accept this offer with a majority vote of the board. I don't know how many seats they have, but so they haven't explicitly rejected it yet, but they did say in the meantime they enacted this poison pill thing, which is pretty confusing. My understanding is it says, okay, if in the meantime Elon Musk gets 15% of the company, then he can, then other owners of the company can buy more at a lower price. That seems very unfair, but I'm not really sure why they're allowed to do that, but apparently they are. So I didn't really look this one up enough, I think. But anyway, they haven't necessarily rejected the offer. So that's the first place you go to, is the board. They're supposed to represent the shareholders. They could do basically anything they want with a majority vote. Takes 51% of the board to do what they want, but it's within the fiduciary.
So this doesn't have to go directly to the shareholders. It can be handled by the board as an intermediary,
right? And it's my understanding
there's some things that have to go to a full vote of the shareholders.
Yeah,
I just looked it up. It looks like there are 11 members on that board currently.
Okay,
if I'm reading it correctly.
Okay. So you need 6. So they could do what they want with a majority vote, but they can't vote. They have to have good reasons. They can't vote for something that's not in shareholder interest, but it's in their interest. So that's like fiduciary duty. But it seems to me like there's going to be some wiggle room there. Like how could you say, well, I didn't accept it because you could probably always give a reason why it's in the best interest of the shareholders, even if you have other reasons for rejecting the bid, I assume.
Right.
So it actually, it's interesting that it dawned on me like, hey, why is it 50% of the board to sell the company? Why, or to make any decision? Like every decision is a 50% vote. Is that the only way to structure it? I don't know.
Well, my understanding is that you can structure your corporate governance such that certain votes require super majorities of various types. But most commonly, the majority rule is how that is handled at the board level.
Well, I was thinking if you needed every shareholder's approval to sell it, you'd never be able to sell the company.
Right.
And as a result, what would probably happen is if the company is more valuable sold, but there's some weird holdouts among the shareholders, then anticipating this beforehand, that would cause the share price to go down because like a poor constitution. But then what would probably happen was the CEO and management would just end up selling the assets anyway and ending up with, so it would be just a very inefficient thing. So maybe 50% is efficient. I don't know. But sometimes maybe it's a good idea to have minority rights. I don't know. But in this case, most of us I kind of want it to be sold. So we want to see what happens. Okay. So, also, before we go on, here's another thing from Forbes, which I don't know if this is, well, it's relevant, but this is only relevant if the takeover doesn't immediately take an effect. The board is actually elected in thirds. Are you sure it's 11 members? Maybe it's 12, or maybe they divide it up somehow. But basically, the board is elected every year, but every year only a third is up for re-election. You have 3-year terms. So it would take a shareholder, even a controlling shareholder, 3 years to control the board in its entirety. But I guess that's only 2 years to make to get a majority. So they're actually for some reason,
assuming you can sweep at each of those elections.
Right. So the election is on May 25th, and so this whole thing could go down by then. But they are putting that to a shareholder vote, the shareholders meeting on May 25th, on whether they want to change it to the entire board gets elected at once. So I don't know. That could have a big effect, and a shareholder probably has to think about what they're going to vote for. Now, I know how some of this works. Is where who runs for board? Is there going to be an election like the elections we're used to in our government? And really, the new board members are nominated by the current board by a nominating committee. So, is there ever really any contention? Probably not too often.
Well, it depends on how your corporate governance is set up. That you can have write-ins, and you can push for ballot measures to try and get someone that's not on that slate. But the structure of most large companies is to make that virtually impossible. That occasionally you'll get an activist shareholder, and when we say activist shareholder, I don't mean like if I wanted to be an activist shareholder, I mean like Vanguard goes and buys up 20% of a company, and so that they can actually have a say. Not unlike what Mr. Musk did, where he bought was it roughly 10% of the company that basically bought him the equivalent of a board seat, so he gets a say here. But he's leveraging that a little bit more now. But yeah, the structure of this rotating thirds, that is an intentional move to prevent the kind of takeover that might be in play here. So that's one of those strategies, in addition to poison pills and requiring supermajorities for certain decisions, is having a board that does not turn over all at once. So you can't come and this isn't just for large corporations. You'll see this in nonprofits and all sorts of organizations. You don't want a group to be able to come in and take control immediately, and that can be good because it preserves institutional knowledge and slows down radical change, and it can be bad because it means that bad actors and old fuddy-duddies can hold on to control of things far longer than they should be able to.
Well, when I was on the Yale Service Corps board, and that was not a corporate board, it was just a
I can't imagine that being at all political in any way.
Oh, no, a bunch of mostly middle-aged Yale graduates? No, not at all. But it was, so I was so thankful that I term limited out, but it was staggering. You had staggering things. So there was some continuity, which was pretty important for that board because, you really didn't get going until you've been on for like a year or two. And also but there was term limits, so someone couldn't hang out for years and years. And you had 6 years. And
there's also a weird thing with a lot of nonprofits, smaller volunteer organizations where, yes, there's elections, but the way it works is that, this officer is then put up for this position. And so there's a clear order of succession.
Yeah.
So you will be, the secretary for 2 years, and then you'll be, executive vice president, and then you'll be president, and then you'll be, president emeritus, and then you will have completed your rotation.
Gotcha.
And it's not in the bylaws that it says this must happen, but that's just how things are done.
Yeah. No. They did that.
Very different than corporate governance.
Except I didn't
see at Twitter. Here.
Except I stopped at member. I didn't want to move up there. But I was on the nominating committee, and we did discuss people, and we did, we did all the hard work in the nominating committee, and then people just said, all right, they kind of accepted our recommendation, and we did a lot of work on it. That was they sprung that on me just as I was on my way out. I was like, I thought I had no more work left to do. And then all of a sudden I had to go through all the nominations for our successors. So, a ton of work. And it was in 2019.
Just out of curiosity, when you were on the nominating committee, if there were, say, 5 seats that were open, did the nominating committee put forward a slate of 5, or did you put forward a slate of here are 8 candidates that we think would be acceptable, pick 5?
I think we narrowed it down. You know what? I don't remember, but I remember we narrowed it down considerably. We might have narrowed it down to the exact 5, but
because it's a very different vibe when there are 5 seats and these are the 5 you should vote for versus we've vetted the candidates and we think these are all good, but there's still some competition because there are more people on that list than there are available seats.
I think we might have taken all of the people applying, gone through the resumes, and talked about the pros and cons. It's just really how active have they been, or if they haven't been active, what did they bring to the table? And then basically narrowed it down and then gave kind of an executive summary of each one. And maybe the board in full did kind of decide on that. But the point was the board decides the future of the board. But that kind of makes sense because it was an advisory board.
Or if not directly,
there are no shareholders. Yeah.
Sometimes it's not a subset of the board that's the nominating committee. Sometimes it's a completely separate committee, but they're still picked by the board.
Right.
So there may be degrees of indirectness, but it's not out of their control entirely.
Yeah. And sometimes that board meeting, even though there was not that much on the line, there were egos on the line. And
for sure.
That, sometimes that gets as nuts as people fighting over billions of dollars.
Well, I was going to say, we've gone a little bit astray here, but egos brings us right back because there's some big egos in play here. Right. So, okay. And sometimes I was also going to add to this. I think sometimes this is an information problem where current shareholders just trust the board, whoever they nominate, and trust management, and don't, like the myth of the rational voter, just don't think about it. But fortunately, we have some benefit here where you do have hedge funds and analysts and people like that who, even if you own 5% of the board, own 5% of the company, it makes sense to hire one of your analysts to go look at the board composition and to vote appropriately. So I could have my numbers incorrect here, but I want to say that I saw something that was listing the shareholders in order of size of their holdings, and there was Musk was number one, and I think Dorsey was number two, but he was at like
as an individual
3%.
Yeah,
So maybe that's different if you look at institutional shareholders. I hadn't thought of it that way.
Yeah. So recently, so the board is still deliberating. It's clear to me they don't want to sell because they love all that power they have, or I don't know, maybe some other reason.
Well, they wouldn't be taking these poison pill maneuvers if they were just considering that you don't because they are to some degree shooting themselves in their foot, but they clearly see it as the lesser of two evils.
Yeah. So now he's exploring this tender offer. He hasn't proposed it yet, but he secured funding for it, which is $46.5 billion in committed financing for the deal. Why does he need financing? Why doesn't he just write a check? Well, most of his wealth is in shares of other companies. I assume he needs to put that up as collateral, or at least, have some people say, well, we kind of trust you could pay us this if in the long run. Yeah.
Does he necessarily need to buy it himself, or can he simply be, okay, I've collected, a superhero team of investors who, between the 20 of us, we can put forward the 46.5 billion.
You can do that.
And they have agreed to let me lead the charge on that. I will represent this group.
Yeah.
Or does he actually have to come with like the cashier check in hand kind of thing?
So my understanding is he could do that. I don't think that's what he's doing, but he could do that. And I was thinking he could get another shareholder of Twitter on board who could put up their shares as part of the price. And so then that shareholder would be minority shareholders in the new company owned by Musk. And so they wouldn't have to, move a whole lot of money around, other than old shares for new shares, which sometimes might be a little, I don't know if that's less expensive, but it seems less complicated. So anyway, what is a tender offer? I had to look that up, like we said. So it turns out he's going directly to the shareholders. He's not trying to pick them off one by one because he needs half of them at once. So it's kind of like, I think it's the Kickstarter model where it's like there's pledges to sell to him, but it only kicks in when a certain amount, like conditionally, if enough of them agree to join. So this is
functionally a way of bypassing the board.
Yes.
And that's why.
And it puts pressure on the board.
I'm looking at the notes here, and so the offer to the board was for $54.2 billion, and this tender offer. Well, so the $46.5 billion is what he has committed financing for. So it doesn't mean it's actually a lesser offer. It's just that's all he's got publicly committed so far.
Right. Seems like he's close enough. Yeah. Okay. So what do some people have to say about this? I just collected some things I saw in the news, and we can kind of put it together. Tech analyst Dan Ives at the investment firm Wedbush told Fortune that a white knight, the financial term for an investor that saves the company from a hostile takeover by acquiring it the last minute, could be Twitter's only chance of dodging Musk's buyout bid. So he thinks they're kind of in a bind where they may have to, like it or not, they may have to accept it, because if they don't accept it, there's either going to be a tender offer or it's just going to be too much that, they're just going to lose too much shareholder value. And so he said they have 3 days, although that was 3 days ago as of Monday. So we'll see what happened. Although I think it's 3 days. I don't know if it's 3 days as of the writing of the article or 3 days from when Musk makes the tender offer, which he hadn't done yet. So we'll see. But of course, one thing you could imagine is if this white knight comes in, what if it's Google or Facebook? So what if Facebook comes in and says, well, we'll buy Twitter for a larger price, and now everyone's together? Mark Cuban speculated that could happen, but he said they're worried about antitrust laws, so it's not likely. But that would be not just big tech, but bigger tech.
It certainly seems like it would be a safer move for them if they could get somebody independent to come in not another one of the big companies. But who is prepared to go in a measuring contest up against Musk here, since he is literally, ranked as the wealthiest person on earth.
Yeah, but corporations have more. Like Facebook and Google have more as a corporation, and so it's hard for an individual to compete with a corporation. Although, maybe those companies don't want to buy Twitter because maybe they think it's a dog and they have their own problems.
Well, that's what a lot of the counters to, and I think you talked a little bit about this in your previous episode. A lot of people are saying is, why would he want this? That this is going to be a nightmare for him to like. Even if he does the best he possibly can with it, it's not going to be a good outcome.
He thinks,
putting aside the acquisition nightmare,
he thinks he could unlock the value by making changes. Now, this is just today or yesterday from when this comes out, is that this is from Yahoo Finance. They say that Twitter is talking to Elon Musk about the deal. So they're in communication, possibly in negotiation, because of shareholder pressure. It says here in the article, many Twitter shareholders reached out to the company after Musk outlined a detailed financing plan for his bid on Thursday and urged it not to let the opportunity for the deal slip away, Reuters reported earlier on Sunday. So who are these people who are pressuring them? Are these random individuals? We talked about funds like Vanguard or BlackRock, which are like these big funds that people have their retirement account in and they just kind of invest in everything. Or is another group? I'm not sure what the answer is, but there's kind of a suggestion in the article where it says, they quote a hedge fund where one of the managers says, I would say take the 54.20 a share and be done with it. Oh, it's not 54.20 billion dollars. It's 54.20 a share. Okay. And then it's 40 something billion. It's very confusing.
We might have our wires crossed somewhere.
Yeah.
We'll double check that.
Okay. I would say take the 54.20 a share and be done with it, said Sam Adrangi, portfolio manager at Carisdale Capital Management, a hedge fund that owns 1.13 million shares in Twitter, or 0.15% of the company, and has been an investor since early 2020, which doesn't seem that long in the scheme of things. So it might be some of these hedge funds that just they do this analyst, and they they're like, not only are we going to invest, but we're also going to invest, maybe not be like an activist by default, but we're going to take our voting and our power as shareholders somewhat seriously, because that affects the value of our hedge fund. So
I don't know enough about Reuters and financial reporting in general to read the tea leaves on this. My initial thought would be if it was Vanguard or BlackRock or one of the big fish that was saying this, they would at least drop heavy hints, if not call them out by name. But maybe it's one of those people speaking on background or on condition of anonymity.
So you think it might be one of these? You think it might be one of these big funds?
Well, and even with what is it, like Carisdale Capital Management, they spoke to an analyst there, or
right,
a portfolio manager, but that's not necessarily the official stance of that capital management, that hedge fund. So it's tough to judge, how much weight to give to this, because it could literally just be that maybe even 10,000 random individuals who own a share of Twitter, through the Robinhood app, sent them notices, but that amounts to, a thousandth of a percent. And,
right,
and so really isn't going to change outcome. It's a classic Twitter problem in that, you could have a very vocal minority who, changes perception, but does not have, realistic, impact on the outcome here.
Yeah, well, it sounds like if these reports are to be believed, then you have some of the heavier hitters putting pressure on them, and I just confirmed it is 54.20 a share, and that actually comes out to 40 something billion. So it's
okay.
Not that it's that important. Only the the magnitude is kind of important to me, but just so that we don't have our numbers crossed. Okay. Another point in the article that confused me and I had to look up, were Twitter to establish that a sale to Musk would be risky, it could ask for a sizable breakup fee according to sources. And I was like, well, what's a breakup fee? So I looked that up online, and it was confusing because it looked like it's something the company pays to the seller. But then I looked again at the example, and it looks like, no, the purchaser pays it to the company if the it's like, okay, we'll deal with you, but we need a breakup fee if the deal doesn't go through, because there's lots of costs of like trying to get this to work. So something like this it's like, okay, we're going to try to get this to work, but or we're going to enter into negotiations, but that alone is going to cost us a lot. So
I could see that if Twitter actually wanted the sale and they thought, well, Musk is flaky. If he changes his mind at the last minute, then we're out, however many billions of dollars of legal fees and getting this all lined up. But in a scenario where it sounds like they're an unwilling partner as well, I can't realistically see them getting that. What I thought the breakup fee was going to be pointing to is one of those other takeover resistant strategies is building in golden parachutes, because what's new management going to do when they take over is they're going to fire all the executives and put in their own people.
Right.
And if you make it so that to remove the CEO requires you to pay out an extra $500 million severance payment, then it makes it very unattractive for somebody to come in and scoop up the company if they're going to have their hands tied like that. And I'm sure there's some of that in place here, but obviously it's not enough to have scared away Musk.
Yeah. Well, even if they could ask for a breakup fee, then have the deal fall apart, then cha-ching. But that seems like kind of someone like Elon Musk would be able to figure out how to prevent that from happening. But speaking of Elon Musk, he's using Twitter to be a troll as he's trying to buy Twitter with Bill Gates. So this is the craziest thing. Some conversation that he had with Bill Gates, another rich guy, for those of you who are another rich tech guy. Some of you have so some of you have seen this. I don't know how this got out, but there were some text messages where Gates was asking Elon Musk for money for climate change. And then Musk asks Bill Gates if he's still shorting Tesla. Gates says yes. Musk says, then you're not serious about climate change. And the effect, good day, sir. And
that was my first question is how did these leak? Because I could see both sides having a motivation for leaking this, and I'm a little suspicious.
Yeah, I don't know. And then he used Twitter to compare side by side between Bill Gates and the new pregnant man emoji. Just the fact that this is where we are now. We have a pregnant man emoji, and it kind of does look like Bill Gates in that picture that Elon Musk posted. But I mean, really, it's just a man with a belly. We've all been there.
I've heard it referred to as the pregnant man emoji, but is that like it's actual whatever the governing body for emojis is that its proper title?
I believe so.
Because if I didn't know it was the pregnant man emoji, I would assume it was the beer gut emoji.
Yeah. No, I think they actually went there, and
that's what I thought,
yeah.
But I wasn't 100% sure.
Yep.
I'm the last to know about new emojis.
Yep, this is where we are right now, and now everyone's like, "Oh, Bill Gates is such a victim of the horrible Elon Musk." Well, yes, nobody wants to be compared to the pregnant man emoji, but it's hard for me to think of Bill Gates as a victim here.
I think he'll be okay crying himself to sleep on his piles and piles of money.
Yeah. Also, he has a trampoline room. That's, I hope he still has it.
Bounce those tears away.
Yeah. So other news from Twitter, a lot of news is coming out at the same time. We could talk about, let's talk about, Well, we could talk about libs of TikTok first, very fast. I mean, that's this kind of crazy. I don't think the person who run it is crazy, but like, it's a Twitter feed where they post all these crazy people kind of shouting and saying all this insane stuff. And they were recently doxxed by the Washington Post. This is just kind of another sort of like, okay, this is what's going on Twitter these days, where you have people trying to get information out there, whether it's satire like the Babylon Bee, or someone like Libs of TikTok who's posting stuff that's like already public. But basically they don't, there is a big information war going on, as we've seen. A big part of the Ukraine Russia war is information war. It's just what information is getting out there. Very important to people. So that's really what the war over Twitter is all about, I think. And I think if Elon Musk takes it over, it'll be very interesting to see how different it will be. It could probably become different very fast. Jack Dorsey, interestingly enough, who was CEO for a long time, he tweeted that the board has been Twitter's dysfunction. And
I believe he is still on the board.
He is on the board, right. So he said, it's consistently been the dysfunction of the company, billionaire Dorsey wrote Sunday in response to Twitter user who commented about how the Twitter board has a history of plots and coups, and how the history of the company could be made into a Hollywood thriller one day. Earlier in the thread, Fred Destin was quoted for what he calls the Silicon Valley proverb, which is good boards don't create good companies, but a bad board will kill a company every time. And Dorsey replied, big facts. But Dorsey might be saying big facts, but he's not giving us the specifics, is he? And probably he can't.
Well, yeah, I was going to say he probably is bound as a current and former member, and past member of the board, that there's certain things he can't say publicly. Whether that's because of non-disclosure agreements or because of his fiduciary responsibility,
right?
Is that the right?
Yeah,
phrasing? He can't talk board business in public,
right?
And having been on the board of some nonprofit organizations, there are moments where perhaps the chairman of the board has to remind people that what we are about to discuss is board business and not public business, and that it does not go beyond this room until we have approved the public release of this information.
Yeah.
So similarly, if he knows inner details of these negotiations that are going on with Musk, he very possibly can't speak to those.
It sounds like Twitter also suffers from fragmentation of ownership, where because ownership is so fragmented among a board, and there isn't like a founder who has a lot of power there, it's a constant, Game of Thrones type situation. And maybe just bad governance. Maybe that could be made to work, but it just seems like there's bad governance in this case. I just want to post a flash.
Well, I'd say there are very few companies that of that size that have concentrated ownership.
Yeah, that's true.
But maybe they aren't necessarily that well run either, and maybe Twitter is in a unique market segment, so the comparisons are not a good metaphor.
Yeah. So I want to take us back now to January of 2021, and that was when I posted the episode 153, Decentralizing Before Our Eyes, and I predicted that given basically all of the alternatives to Twitter, and given how they were behaving that month, that they were so screwed. And it looks like things, I mean, I was right that they destroyed a ton of value, but it didn't play out the way I thought, because the alternatives, yes, Mastodon is still there, and alternatives are still cropping up left and right. But before that got a chance to start nipping at Twitter's heels, they just lost so much value that Elon Musk could come in and sweep them up, which is kind of interesting. So that was around the time that they banned Trump from the platform and a lot of other people. So that's when they did like kind of the nuclear option. That was sort of their Order 66. If you're a Star Wars fan of now it's time to ban all our enemies. And that was it was kind of a trickle before, it started with people who were like, Milo Yiannopoulos back in 2016, and you're like, he's such, I don't really, I already had him kind of muted. And then Alex Jones, it's like, I could see why you don't want Alex Jones. And then it was just kind of drip, 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 and then more and more and more. And then finally they were like, everybody's off. Except for me, I'm still on Twitter, so that's good. I know you're off, but not.
You haven't been trying hard enough.
Yeah, you're off because you just never got on, right?
I was precognitively banned.
Precognitively banned. So anyway, he was asked about that banning in January 2021, and he really didn't have a good answer. He wrote, "This ban was the right decision, but it sets a dangerous precedent." And the ban is a failure of ours to promote a healthy conversation. Now, that was just a really weird response that he had at the time. Like failure
I'd say that second one, the failure to promote a healthy conversation. I wouldn't give much weight to that in that specific instance. I would say that's a generality that if we have to ban someone, it's because we have failed to instill in them the proper, etiquette and behaviors, and that's broken down. I don't think he was using that necessarily as or expecting that to carry any weight as a justification for the Trump ban in particular.
Well, no, that's what he was saying about Trump in particular. And it's kind of like, what does it mean to promote healthy conversation? Like, what was he going to do? Tell the president to tweet differently? So, I mean, what does he think they should have done? It really doesn't answer. It doesn't give us
what leverage do they have other than issuing warnings and temporary bans?
So to me, it sounds like messaging from someone who has to come up with something because he knows what's going on is crazy. And I think what happened at the time is they were acting emotionally, and they were not acting based on the facts. I get the emotions running high, but it kind of ended up whittling down the company considerably, and they really didn't say what they wanted to accomplish. So, because they don't have, you can't be perfectly objective in the rules, but they're not even trying. they're just,
I've definitely seen the straw man argument that, well, Elon Musk wants to take over Twitter and make it so that there's no censorship, or that there's
it's a straw man.
And I think there's a valid point to be made that there's gonna have to be rules. But I think people's hope that are pro a Musk takeover are that he will require them to set out a clear set of rules which will be enforced in a transparent and consistent manner, which will hopefully have a superior outcome.
Yeah. He said
it's entirely possible that from the inside of the machine he might realize, well, that just doesn't work, and the only approach that's going to be at all viable is to throw more human moderators at it to try and deal with all the edge cases, and we might be right back where we were to begin with.
Yeah, he said he thinks if they're doing it right, there'll be kind of some fringes on all sides that will be unhappy. Not necessarily banned, but unhappy. But like, but he thinks he could make the majority of the center happy. We'll see. That'll be interesting. It's hard enough to. What was it? I hate to quote Hamilton, the musical, but winning is easy, governing is harder. He might get this, and then he's just at the beginning of trying to figure out what to do. So I'm excited.
Although if he takes it private, then how you govern it, the dynamics change.
Right. But he still has to figure out how to govern the actual. He doesn't have to. The governance of the company is one thing. Like, how are they hiring? What are their company policies? Maybe that's a little easier when you have a dictatorship of one person. But he still has to figure out how to govern the actual website, the network, the people who are contributing to Twitter, including most of us, including me. And so it's like that's going to be a very hard problem. But right now,
Indeed.
it's utter chaos. So, all right. Let's finish up for today. It's went a little longer than I thought. It's getting a little later than I thought. I I think I filled it out with my last words. Any last thoughts, last questions?
Well, I'll go on the record now and say, if Elon Musk does acquire Twitter, I will continue to not participate on the platform.
Okay.
So I'm making a hard stance there.
Is there anything that Elon could do to get you back?
I suppose a personal invitation might actually sway me.
Oh, okay. That's not hard. So all he has to do is ask you.
But I'm not on Twitter, so how's he going to ask me?
I mean, he could.
He
could join.
Have to troll me like in person in the flesh. So
well, he could join our locals at maximum.locals.com and say, "Hey, Aaron, would you mind joining Twitter?" I think that
I
you
accept
would
your terms.
Yes, I think he would. I think he would do that if that happened. All right, exciting news. By the way, do join our locals at maximum.locals.com. Tell us what you think. We got some. I'm starting to do some more live streaming there, which is just my random thoughts. If you want to hear those, and a lot of good conversations happening on there. So, all right, that's it. I've got some good interviews coming up. Have a great week, everyone. That's the show. To support the local Maximum, sign up for exclusive content and our online community at maximum.locals.com. The local Maximum is available wherever podcasts are found. If you want to keep up, remember to subscribe on your podcast app. Also, check out the website with show notes and additional materials at localmaxradio.com. If you want to contact me, the host, send an email to localmaxradio@gmail.com. Have a great week.
Feel the power.